segment, and we had to cancel that, unfortunately, to all the precautions with the virus. So I'm so excited that we're getting to have this Zoom call and really dive in one-on-one, and might even be a better scenario for people to be able to absorb everything that Jesse has for us today. So thank you all so much for joining. I want to first things first, thank our sponsors. YPN would not be able to do everything that we're doing this year, and we wouldn't be able to have our organization without this, the help from our sponsors. So I'm going to go ahead and give them a shout out real quick. We have our platinum sponsors, our Oakwood Escrow, Rancho Ted, it's private hard money lending, and State Farm Insurance, Jake Caesar's office. So I don't know, I haven't seen them on the call yet, but thank you so much. We really appreciate your support. If you all have an opportunity to support Oakwood Escrow, Rancho Ted, and State Farm Insurance, please do. Those are our platinum sponsors for this year. And next, a huge thank you to our gold sponsors. We have Windermere Homes and Estates Brokerage. We have Bird's Eye Home Inspections. We have Team Mortgage. I see Stan Stark is on the call. Thank you, Stan, for your support. Yeah. And we have Better Home Inspections. So thank you all for your support. They are all, we stand by them, endorse them. If you need great services, please use our sponsors for YPN. And thank you, sponsors, so much. We really appreciate your support. We appreciate everyone logging on this call. We've got some more in here so far. So thank you all for taking time to do this. I'm going to go ahead and hand things over to Jesse, because that's what we're all here for, to hear what Jesse has to say today. So Jesse, thanks again so much for doing this for us. I'm going to hand things off to you.
My pleasure, Melody. Thanks to you, and thanks again for having me back. It's our annual tax talk, right? My name is Jesse Lipscomb. I'm an enrolled agent and investment advisor. For those of you who don't know me, I specialize in tax planning for real estate investors, real estate agents, small business owners, and have actually just recently launched Roadmap Insurance as well. We have just God, there's so much going on. We're going to break this workshop into 3 categories: taxpayers, small business owners, and then I'm going to give you some tax and financial insight that you need to know. I was able to acquire a website, 2020taxstimulus.com, and as we go through this workshop, I'm actually going to reference the blog several times. I put a ton of resources there for you all, from videos to links. It's really trying to help you get through these hard times. Regarding taxpayers, the 2 areas that everybody's most impacted or most concerned with are the stimulus checks and then how it affects housing. So let's get right into it. The stimulus, they're also called recovery rebates. They began going out on the 9th. If you're single, you make less than 75 grand a year, you're going to get $1,200. Married under 150, $2,400, plus $500 a kid under 17. You'll notice on the slide that it phases out to about 100,000 single, 200,000 married. Here's a strategy. If you had just the best year of your life in 19 and it wasn't as good in 18, everybody, all businesses, all people are on extension through July 15th. You may decide not to file your higher earned income taxes until you get the stimulus check and then turn around. Conversely, if you had a great year in 18 and 19 wasn't as good, make sure you hurry up and file your taxes so you get that money coming out. The IRS stats are 70 to 80% of Americans who are entitled to a refund already have direct deposit. And so if you don't have your banking information communicated to the IRS, they're going to start sending out checks in $10,000 AGI thresholds, meaning if you made $10,000 or less, $20,000 or less, $30,000 or less, they're going to start sending out checks once a week at the end of this month. If you made $140,000 married, you won't get a check until September. So it behooves you to make sure you can update your information. To that end, the IRS has recently launched the Economic Impact Payments website. Remember, I talked about 2020taxstimulus.com. We're going to click on that, and we're going to see that I actually talked you through how to do it in a video online, as well as the tool, which will bring us right here to the IRS website. Now, Melody, I'm actually going to give you a demonstration of how this doesn't work. Okay, what?
Okay, great. Let's see it.
Did he say how it doesn't work? All right. I know my tax guy. He's wonderful. He's current on his taxes. But, oh my goodness, his payment status isn't available. A lot of people are getting this. Don't worry about it. It's just it's a new program from the IRS. If you get that, more often than not, it just means that they haven't integrated your data yet into this lookup tool. Additionally, they haven't processed your 19 return. Well, if you're on extension, that makes sense. They haven't even looked at it, right? So, and then the other part is, like, I'm a veteran. I receive a VA disability payment every month, and I believe that part in my situation is because they're coordinating with the VA for that direct deposit info. So I guess what I'm trying to tell you is that if you go to this tool, okay, the online tool, and you go through it and you get that nasty payment status not available, don't freak out, don't worry. It is what it is. Now, let's go back a page. If you don't have a filing requirement for non-filers, it's really not that hard. I helped a client walk through this the other day. It's really, this is through Intuit. You need to create an account. You're going to answer certain questions about yourself, and then you're going to put your bank information in there. So the tools are good, but I recently found out something even better. The IRS now has a new hotline. This is late breaking news. It's just, I literally learned this the day before yesterday talking to an IRS auditor. This phone number, this hotline, 1-800-919-9835, it literally just launched, and the rep told me that he expects it to change over time, but the purpose of it is actually to be able to update your direct deposit information if you need to. So. Oh, and Lori poses a great question. It's, let's go back. She says, hey, but if you're a non-filer, it says not to use that link. Kinda. Here's what it means. If you're a non-filer, okay, meaning you don't have a filing responsibility, if you're receiving Social Security or SSDI or other, veterans benefits, yeah, you don't have to file your taxes. Therefore, you don't need to do this because they already have your information on direct deposit. However, if you haven't filed your taxes, just haven't filed your taxes without good reasons, you can go in here on the non-filers to update your information, right? So if they have your direct deposit info from Social Security or the VA, nothing you need to do. But if you've just decided that filing your taxes isn't something you should have been doing the last couple of years, you can still update your information here. So that's a good question, Lauren. The next area is housing. And I'm sure we've heard that there's a moratorium on evictions right now. If you've got a VA loan, you've got FHA, USDA, you can get forbearance now for up to a year without proof of hardship. Foreclosure actions are paused. And even on multifamilies, you can get forbearance, but it comes with the caveat that you can't evict or charge late fees to your tenants, okay? One of the strategies that we haven't really talked about, or at least I haven't heard many people talking about, is the Section 121 exclusion. most of you know this as you've lived in the house 2 of the last 5 years, you can protect 250 or 500. But if you pull up IRS Pub 523, it actually talks about exemptions to the 2-year rule, specifically unforeseeable events. And what is that? Well, if your spouse dies, or you get a divorce, or you have twins, or if you're eligible for unemployment. This is a big deal because a lot of people have just lost their jobs. And with the real estate market being as high as it's been the last several years, this scenario is completely likely. March 31st last year, they buy a house, get a great deal on it. A year later, it's already gone up $100,000 in value. April Fools, guess what? You lost your job. That's horrible. You got a $100,000 gain. Are you going to have to pay taxes on that too? Well, no, because you're going to say you've owned it for 12 months. The 2 of 5 years is 24 months. So 2 of 12, or excuse me, 12 of 24 is 50%. 50% of the exclusion is 125. That means that 125,000 is protected. You have a $100,000 gain, and you don't have any capital gains taxes. If I was a real estate agent right now and I was talking up, trying to continue to prospect and market and connect with folks, I would kind of think that this is going to be on the minds of a lot of people. Man, I've lost my job. I'm going to have to sell my house. I don't want to damage my credit. I wonder if I'm going to have to pay capital gains taxes. And I know you can't give tax advice, but at least you can tell them, hey, my tax guy said that there might be an exemption if you lose your job. Feel free to share this portion of this recording with them, or even have them visit 2020taxstimulus.com and they can reach out and ask us a question. Also, 1031 exchanges, there's an IRS Notice 2020-23. It extends the 45-day and 180-day deadlines if you're actively in a 1031 exchange. And those deadlines were going to hit between the 1st of April and the 15th of July. They're automatically extended now to July 15th. That's a great amount of breathing room. Of course, unfortunately, if those deadlines hit before April 1st or they're posed to hit after July 15th, the IRS hasn't given us any guidance as to any potential extensions. So this is kind of a little quirky niche, but if you're actively working with a 1031 exchanger, maybe you can relieve some of their stress knowing that they've got until July 15th in most cases. All right, so any questions real quick? Thanks, Jessica Cruz. Any questions regarding the stimulus or any housing and taxes before we go to the next section? Perfect. All right, so let's jump into small business owners. All of us are either independent contractors or we've incorporated, okay? And let me tell you, regardless of whether you have an S Corp or a C Corp, the IRS wants you to be on salary. And to that end, everything, both of the SBA loans, the unemployment, all of this is going to ask, what was your salary last year? What wages did you pay? Or were you an independent contractor? There's absolutely nothing available out there for S Corp owners or C Corp owners that don't have payroll. Can you see the asterisks here? Well, in a later slide, I call pandemic defense, we're going to talk about strategies, how to find a way to win here, okay? But as it stands right now, if you're not paying yourself salary in a corporation, you're really kind of in a hard situation. Regarding the SBA loans, the Keeping American Workers Paid in Employ Act, there's the 7 Alpha Payroll Protection Loan, and then the 7 Bravo Economic Injury Disaster Loan. At the beginning, this $10,000 sounded really, really enticing. Man, we just have to apply for it, we get $10,000. And it turned out that that wasn't the case. It turned out that although it was ridiculously easy to apply for it, the SBA only made it $1,000 per employee. And I don't know of very many people that even have received this money. So it then kind of focuses our attention. This is what the SBA says. They really want you to check out the payroll protection program, and that's what we're going to spend the most of our time on today. And it was really interesting. Later, I'll show you what the law said, and I'll show you what the SBA did, and they're really not the same thing. All right, the 7 Alpha payroll protection loan. Given wages that you paid out, okay, in the last 12 months. Now you can read, yeah, absolutely, Alex, we can get you copies of these slides. Additionally, we're recording the whole presentation. 2.5 times your average monthly salaries, the law says in the last 12 months. The SBA application is saying of 2019. But either way, you can have this money forgiven if you use it to keep your payroll. So this is actually a screenshot of the law that was passed. If you use these funds for payroll costs, rents, interest on mortgages, now I'm assuming these are SBA mortgages and business rents, not personal rents, and business utilities, that you can get these funds forgiven. Okay, as of April 16th, they ran out of money. Okay, the good news is, as of today, they've now approved additional funding. Okay, to put in perspective, the original the original amount of money was $349,000. Okay, and that went out in like 2 weeks. I think they've allocated a total of 480 some odd billion, but there are a lot of there's a lot of gotchas to it that I can tell. Not gotchas in terms of making it hard to apply, but pigeonholing money for various types. I think when it's all said and done, I think it's a 310 billion that was allocated specifically for these payroll protection loans. And what that means to me, I expect this money to be gone in another 2 weeks. Okay, even to the point where when we look at the banks and the lenders, Chase is great because if you had a bank account there as of February 15th, it tells you what they want. They want the W-3, which is the summary report of the W-2s you filed, or the 940 or the quarterly 941 payroll statements. If you're self-employed, then a copy of that personal tax return Schedule C. But I don't know if you caught it or not. This is what Chase comes out with just yesterday and says, we've begun submitting applications to the SBA. We've never stopped working. However, we've decided not to take any new applications now. They may change their mind in the future, but I think this is in response to a lot of the negative publicity that Chase received, because they've got their big business operation and small business operations, where the big business operations received a lot of money up front. And then, as the program ran out of money, they looked like they were trying to push down a lot of small businesses. I don't think that's the case. I don't think they were doing anything wrong. But I do know that a lot of small business owners have been hurt by not getting those funds. One of the SBA lenders you might not have heard about is called Cabbage, cabbage.com. The only thing that's confusing about this for you all that aren't incorporated, it talks about they want a 1040C. And all that means is that's the Schedule C of your 1040. That's basically your business profit and loss that you file with your tax return. You take that plus your 1099s, and that's how you apply for it as well. Okay. Similar to Chase, it says that it wants quarterly tax statements, W-3s, and 940s. Okay, we're moving fast. Don't hesitate to ask any questions if you have any. The 7 Bravo EIDL loan was that.
Jesse?
Yeah, go ahead.
If I could interrupt for a second, just a heads up. The biggest challenge with that last one you just talked about is most financial institutions were not taking new applications unless you had a prior business bank account with them.
That's right.
And U.S. Bank, for those on the call, U.S. Bank just started today with the new applications, although it could be done by tomorrow. They will allow you to, they will take an application if you have any kind of existing banking relationship, credit card, even if it's like an REI account that's backed by U.S. Bank, they will take applications, but only if you have a prior business banking relationship with them. Still haven't found anybody that, if you don't have a banking relationship and you need one of these, willing to take those applications.
It's right here, Stan. Cabbage.com. They're an SBA lender. I've helped several clients apply for it through this site, and they're not a bank, they're just a lender. And so you literally just upload your information, and there you go. QuickBooks Online is now offering it as well. I think I saw something from ADP, I'm not sure, but I know for a fact that QuickBooks Online, if you've got QuickBooks Payroll, they're offering it. They may also be offering it through their main channel, but I'm not sure. I do know that Cabbage works though. And Stan's right in so much as like Chase, if you didn't have an existing relationship, they really didn't want to work with you at all. Okay.
Now it's interesting you bring that up, Jesse, because just today, there's a credit inquiry that I had back in March from Cabbage, never heard of them, and actually disputed the inquiry because never heard from them, didn't know anything about them.
Yeah.
And I did do that first one, the EI, whatever that one was.
Yep.
Never heard word one since that time.
Yeah.
And I got to go back and look and see if that inquiry was right after the date of that. I never heard from Cabbage, never applied on their site or anything.
Yeah, I don't know. Maybe, I don't know.
So it's interesting to see if maybe they're back in that other one that was the smaller one.
Yeah, well, and see the smaller one, what was interesting about it, and when I first started doing these workshops, I had this here as a hyperlink to be able to help people. On like the first workshop that I did in the first week of April, I literally went through and showed people how to go to the SBA site and apply for it.
Right.
But as you can see here, it shows that they won't accept new applications for EIDL because they're out of money. But even at that point, it quickly became, I don't want to say worthless, because if you get an extra $1,000, it helps.
Right.
But it's not the $10,000 that the law alluded to. This is literally from the House bill that was passed. It was supposed to be an emergency grant funded within 3 days after application. And it was going to be, we read this, it says, shall not be more than 10,000. Everybody in America reads that as a $10,000 grant. And the bottom line is, the original part said you wouldn't have to repay it even if you weren't approved, but that if you're going to get the 7 Alpha payroll loan, which we just did, part of that loan forgiveness would be offset. The key to this was you could use 7 Alpha to pay payroll, and then you could turn around and use the EIDL loan to pay your business rent or other obligations. Okay. All in all, it really benefited people who were paying themselves salary. Okay. The next phase that's really going to be benefiting people, I think, is the pandemic unemployment assistance. It hasn't even launched yet. This launches in April 28th. And I received I'm sure everybody here did, from CAR. It talks about that independent contractors shouldn't even apply for unemployment until the app launches to avoid delays. Unemployment's been pushed out now to 39 weeks, and through July 25th, there will be $600 extra a week. If you Google EDD PUA, you'll get the following link. Okay. This is very busy, but you'll notice that some of the benefits will be retroactive. And I've consolidated a lot of this in the next slides, but the bottom line is this pandemic unemployment opens up unemployment to a lot of people that wouldn't ordinarily receive it. And actually, let's talk about the phases. In phase one, if you were unemployed from February 1st to March 28th, they were going to start pushing out a minimum of $167 a week. And when I say a minimum, they're just pushing money out right now. Okay, they're going to go back and evaluate what you're really qualified for, and then retro that back. Right now, we're in phase two. So if you end up applying for this pandemic unemployment, you'll get $167 a week plus $600, which then ends July 26th. And somewhere in this period, they haven't said when, they'll go back and they'll shore you up in your monthly income based on what you're entitled for. This right here is so helpful. This is an actual unemployment calculator from EDD. Okay, let's just suppose you're paying yourself a $2,000 a month salary. Your estimated weekly benefit thus will be $231. If you're going to receive $167 a week, whatever the difference there is, what, 33, so that's $64 a week, they'll then turn around and retro that to you later on in the year. Tom Henkel's asked a pretty good question. He says, do you know anyone that has received funds through EIDL or PPP? I applied for both and nothing. Okay, man, Tom, you're hitting the nail on the head. So I applied for my company because I've got employees. I applied for EIDL right at the end of March. 3 weeks later, we received $2,000 because we've got 2 employees. Okay. Chase literally sent me an approval on our PPP loan yesterday. Like, I literally got it yesterday. And they said that they're not going to distribute funds until SBA gives them their guarantee code, which they wouldn't have done before today, because today is when they approved the additional appropriations. I think the vast majority of agents out there that have applied for either of them, EIDL has been, I mean, worthless if you don't have employees. And PPP, I think, will continue to be frustrating. Although if you've been able to apply for it, if you're already in the queue, it appears to me that they're processing these applications just, I don't want to say first come, first serve, but as they're able to get through the file. I know, like in our case, my 2 employees now earn substantially more than the part-time employee I had a year ago. And so I even literally wrote Chase a letter explaining that, you know, we can't use 2019's income. We're going to use what the law says, and that being the last 12 months, because it made our average monthly payroll higher. Okay. And Lori's right also. Yeah, EIDL ran out of money so fast, it was only $10 billion. And it's really been frustrating. Payroll protection, you can apply for that whether you're incorporated or not. Okay, so let's talk about offense and defense. I'm a small business owner just like everybody on the call. I believe that we all have to prospect and market and partner for success. And the more good activities we have, the more activities we have, the more opportunities we'll have. I also believe that right now we're enjoying the fruits of our activities from 90 days ago. But I'm really concerned, as Melody and I were talking about earlier, that if we don't have the right amount of activities right now, this summer can be really, really frustrating for some of us. So the best advice I can give you here is hope for the best and plan for the worst. If your pipeline is still strong, it's awesome. But if you feel like you're getting paid on old deals and you don't have a strong pipeline, we need to take a look at some pandemic defense. And what is that? Well, step one, let's apply for those payroll protection loans. I think that with the additional funding, which should start posting even as soon as tomorrow, they will start funding more of these loans. I think looking at whether it's your bank or Cabbage or whatever, you just got to get that packet in. Similarly, if you're self-employed, getting that Schedule C prepped, sending it in, and if you receive these loans and then you use them, right? So if you're incorporated, you've got here. I'll do a quick on-the-fly example. Let's say that you make $5,000 a month salary. Okay, so payroll protection is going to give you $12,500. Your company takes that, you run 1 or 2 payrolls, you pay yourself the whole $12,500, and that money will be forgiven because it was used within the first 8 weeks. Now, time goes on, you get the money, you get some more sales, everything's good. But if your pipeline dries up, even after taking the payroll protection funds, then you look at filing for unemployment with the pandemic assistance. You're looking at $600 a week plus, as a minimum, plus whatever you're entitled to. You're getting $1,000 a week. That's $4,000 a month. That should help you make it through. Okay. Now remember, way back when we were talking about the different types of people on the call, we talked about.
Your life is all good. You publish it.
I didn't quite get that.
When it's done, publish.
All right. So we talked about 1099 versus corp, independent contractors, and corporations with or without salary. Okay. This is what I'm getting at pandemic defense. As an enrolled agent, I've represented clients in audits, and the IRS will take people that have corporations and they'll say, hey, you know what? You've got a corporation, but you haven't been paying yourself salary. We're going to go to salary.com and we're going to assume that this was your salary. You've got to go ahead and file all of these quarterly payroll tax returns. Okay. The IRS cares more about whether you actually file the forms than they care about you paying the money. And I know that sounds crazy, but it's true. If you have a corporation and you haven't been paying yourself salary, but you've been taking money out, guess what, guys? It's better late to file these forms and be able to qualify for these various programs than not file them and not qualify for anything. So let's take a look at an example. Let's say you're paying yourself $3,000 a month in salary. That's a $7,500 payroll protection loan that you've got 8 weeks to pay yourself back. No problem. When we go and we go back to the that calculator I showed you, I'm going to show you 2 different ways of looking at this. $3,000 a month for the whole year is $347 a month. But maybe you weren't paying yourself a salary. Maybe at the bottom line is you paid yourself an annual salary. That's potentially going to get you even a higher weekly benefit. And so now we look at this pandemic defense and we say to ourselves, okay, if I've got to file the forms for Q4 of 19, it's going to cost me self-employment and payroll taxes, plus potentially late fees and potentially state tax fees, but look at what the incentive is. If you were going to pay $5,500 and your business really was reeling, $1,000 a week through July, it's like $15,000 plus $7,500 plus up to $450 a week through Christmas. I think that you could position yourself for success even if, as a small corporation, you actually weren't paying yourself payroll. You go in and you file late, and it will help you qualify for these programs. The big problem that I saw, and I was looking at this last night, is filing the federal forms is pretty easy, but California, which is their quarterly forms of the DE9, DE9C, they only let you file them online, and they only let you go back 1 quarter. In April, we're now 1 quarter back's first quarter 2020. I don't know how to go back and file these state forms for 2019, but I kind of think if it ultimately came down to it, you could provide EDD with the W-2, and that might be good enough. So, boy, I know there's a lot of stuff going on right here. But we're going to push through to the next section, and that's taxes and financial insight. One of the interesting things, if you have up to $100,000 in an IRA, you can take that money out right now, avoid the 10% penalty, and either repay it over the next 3 years or pay taxes on it over the next 3 years. Okay? This is a big benefit, I think, so that if you're in a financial pinch, that you don't have to spend up to 50% of your asset in taxes right away. Also, if you're taking minimum distributions, they've been waived for this year, which is also very helpful. I've also heard that if you've taken them, you can put them right back in. Now, with all the insanity going on in the markets, I wanted to address the different phases of retirement, specifically accumulation. This is the YPN, right? If you're 20 to 50 or 50 to 70, all right? Accumulation is 20 to 50 and transition is 50 to 70. What I mean by that is during accumulation, you hear this all the time. Oh, you know, you've got to invest for your future, and you've got to have a diversified asset portfolio. But really, we're going to learn 2 things here. Number one, it's the amount of time you have in the market. It's not whether the market's up or down. And a strategy called dollar cost averaging, which will talk about shares. And so asset allocation is really just your stock and bond mix. It's a growth strategy based on modern portfolio theory. It is not a retirement income distribution strategy and has been proven to fail more than you're going to be comfortable with in retirement. So as a growth tool, I'm going to have a mini poll here. If you were going to invest $100 a month and you could do it every month in an up market, or you could do it in an up and down market, what do you guys think? What would be better? Would it be better to invest when the market's going up, or would it be better when it's going up and down? Well, let's see. If you took $100 a month at $10 a share, that's 10 shares. $100 a month at $20 a share, that's 5 shares. If you average that out, you would get 76 shares at $20 a share, that's $1,538. We are currently in an up and down market. As it goes down, you buy more shares. Ultimately, you would have more than double the amount of shares and more wealth just getting back to even, right? Thank you, Candy Vargas, great job. But what's nice about this is when that $10 a share gets back up to 20, you'd have substantially more. So if you're in the accumulation phase, it's time in the market, not the timing of the market, and get dollar cost averaging on your side. The same is not true if you're in transition. principal protection is the name of the game if you're 50 to 70. You can't afford to lose half of your wealth and wait five years to come back if you're on the precipice of retirement. Income allocation is nothing more than identifying those assets, those resources you're going to use to guarantee you income in retirement. So historically, Social Security and pensions, most of us have 401ks or IRAs or other investments, and prior to retirement, we think of them as growth assets, but we're able to reposition some of these into guaranteed income annuities. They're not sexy, they're not going to grow, but you know what they're going to do is they're going to guarantee you income via guaranteed minimum withdrawal riders. Let's assume somebody has $200,000 and they're 57. Okay, if they took 120 grand and had a 7% rider, and at the end of 10 years, they're guaranteed $1,000 a month the rest of their lives, even if they spend all that money down. They had 200 grand starting out, 120 goes to their income base, the other 80 goes to growing, and ideally, that $80,000 is additional lifestyle in retirement when pairing your income with Social Security and pensions and everything else. So my whole point here is the strategies during accumulation and the strategies in transition and later into distribution aren't the same. Here, you've got to make sure you're only risking what you can afford to lose. And here you've got to harness and get time on your side. All right, so next up, we're talking about health insurance. We haven't had to talk about this for almost, 10 years? It's actually back. Don't take my word for it. This comes right from FTB. Beginning January 1st of this year, we either have to have health insurance, find an exemption, or pay a penalty. And that penalty is evil.
Hey, Jesse, I don't know if it's just me becoming very difficult to hear. Is anybody else having that challenge?
I'm having the same thing.
I am too.
Yeah. It's still fuzzy.
Let me see if I can, maybe I can call in.
Yeah, it's just the audio. Your video is so great.
Let's see. God, it's the fun of a new technology, huh? All right, let's see if I can find the phone here. Let's see, switch to phone.
While Jesse is doing that, we could take a little.
Right?
Yeah, I did want to we can do a little commercial break here. How about that? We have two of our sponsors on the call. Stan Stark with Team Mortgage is one of our gold sponsors, and Tawny Vargas with Oakwood Escrow is on the call. And I wanted to give them a minute to say a little blurb at the end of the call, so maybe we could just do that now while Jesse's getting the audio a little straightened out. Stan, do you want to?
Well, why don't we go beauty before age? Let's go to Tawny first.
Okay. Is Tawny on and ready?
Yes, I just unmuted myself so everybody can hear.
Perfect.
Good?
Yeah, we can
I
hear
was
you.
hoping I wasn't going first, but I appreciate it. Hello, everybody. My name is Tawny Vargas. I'm with Oakwood Escrow. I just wanted to say a little bit about us. We were pretty much founded on the basis of bringing a better escrow company to you and your clients. So everything we do is gold standard and above, from our security and safety to the team that we take on. We only take on the most experienced, but also escrow officers that have very giving hearts. So we want to be able to handhold your clients through every experience. We truly believe in being an extension of you and everything that you do for your clients. So especially now in the challenging and changing times, it's not always easy, but that's what we're here for, is that baton pass into escrow. And we're here to make them feel comfortable, to let them know you know, the ins and outs of escrow and anything that we can do to make them feel safe and secure through the home buying process is our job and our duty, especially me being a rep, working with you. Have my phone on me every second of the day. So if you need anything or any extra help with them, I'm always available to you. We do have a virtual escrow that we started last year, so it's coming into play this year. If you're interested in hearing more, I'll put my name and info in the chat box, and I look forward to hearing from you.
Awesome. Thank you so much, Tawny. Tawny and Oakwood Escrow are one of our gold sponsors this year. So thank you so much for your support. And we really appreciate you being on the call. And how about we give Stan Stark, are you ready and want to give us a little blurb about Team Mortgage?
Sure. Before I do, Jesse, give me a thumbs up if you can hear me.
Yeah, we're good to go, I think.
Okay, good.
Awesome.
So just a shout out to Jesse. So while we're on the call, to show you guys how easy it is, I went onto the Cabbage site, actually completed an application, uploaded the documents, all while listening to Jesse. So great recommendation on the Cabbage site, and the application was accepted at that point. So it's that easy. There's not much to it. And it was really simple, and I was able to do it while we're on the call. So Jesse, shout out to you. Good job on that. Yeah, on behalf of Team Mortgage and Windermere Homes and Estates, one thing I wanted to bring everybody aware of, and those that are from Windermere heard me talk about this earlier, something that because of the whole virus deal, if you go on annualcreditreport.com, you're entitled to one free credit report from each of the bureaus each year. Because of what's going on right now, they've changed that. You're entitled to a new bureau report from each credit bureau once a week, every 7 days. And that does not count, it's a soft pull, so it will not affect your credit score. It won't show up on a credit report as a hard inquiry. And if you have any clients or you yourself are doing any kind of forbearance with auto loans or credit cards or mortgages, it's really important to stay on top of your credit, because they may be telling you they're not reporting it as late, but you don't know what's actually getting reported. It could be an error or whatever. So it's really important and a good thing to share with your clients. And if anybody is interested, I can share the link. I posted it in Escondido, Real Estate Professionals, also Carlsbad. You can share that with your Facebook group. There's a great article in Business Insider about that. So just a heads up to everybody. It's a good thing to share with your clients to stay on top of the credit. That's never happened before, and it's good for the next 12 months. So thanks, everybody.
Can you guys see this? I actually posted on the.
Yep.
Can you see my screen here?
Absolutely.
Perfect. Yeah. Free weekly. That's awesome.
Awesome. And we've got Jesse back in action.
Phew. Embracing technology. All right. Did you guys hear the wrap up on the basically the financial management? Right, everything was good until we started talking about health insurance.
Yes.
Yeah. Okay.
Yes.
Cool. So what I was saying is, I haven't had to talk about health insurance since 2008, when we ended up getting Obamacare, and it's since been repealed. It's federally. We don't have to have it, but in 2020, it's back in California. And I said, don't take my word for it. It's literally, this is the FTB's website. You either have to have coverage, have grounds for an exemption, or pay the penalty is ridiculous. I'm going to show you in a minute what it is. Some of the exemptions here, whether it's a short coverage gap or income limitations, or, you're incarcerated. But what I wanted to share with you is their sample penalties aren't anywhere near as threatening as reality. And what I mean by that is this is an estimator of the penalty from the FTB. And if you go and you look at it, you say, okay, I'm single and got no dependents, I'm making $150. If you don't have coverage all year, that's up to $3,300 in tax penalties from the state of California. I mean, that's ridiculous. And if you're married, it's not much better. If you're married and you're in your 40s, say, no dependents, making some money, that's still $2,800. So the advice I'm going to give you is this. They're giving you a special enrollment through June 30th. Since we're past April 16th, anybody that enrolls in insurance will be covered on June 1st, but you really ought to have it. I mean, I know a lot of young, healthy people that say, oh, we don't need it, but given the nature of this coronavirus, I'd say if you can get health insurance, you really ought to. Sole and separate of potential penalty abatements there. Okay, the last bit is on life insurance. I've heard a lot of people talking about life insurance because, they're sitting at home, they're thinking about getting their estates in order and everything. Interestingly, who wants to have a health person come to their home and do a sample of blood and urine, whatever? That's horrible. Well, a lot of carriers are now offering examination-free underwriting up to age 50, up to $1 million. They're allowing for electronic applications. However, if you're 60, 70 years old, they're not denying you coverage, but they are postponing decisions. And I think that's because of the potential mortality issues associated with COVID-19. I'm going to show you an outside-the-box strategy right now on how to save 30 to 40% on the cost of coverage. And the whole idea is, why would you ever get life insurance? You would get it to replace the income that was lost to your family, God forbid. Okay? And what I mean by that is, let's say you're making $120,000 a year. What is that? That's $10,000 a month of income. If you pass away, that's what your family's going to need. So instead of getting a $2 or $3 million policy that'll pay out lump sum, you could do this. You could get a contract that won't pay out lump sum. Here, prospective client, she's 41 years old. Should she pass, it'll pay out $25,000 and $10 grand a year for 30 years. The total benefit is $3.6 million, but she'll only pay premiums based upon $2.4 million. And the idea there is, if we just do some fast math, 2,447,440 divided by, okay, that's 67, right? 67%, which is a 32% discount. And I'm not saying that everybody needs $10,000 a month as a death benefit. What I am saying, if you're looking at life insurance options right now, the good news is you can do a lot of examination-free underwriting if you're under 50. And if you're looking at providing for your family an income stream, you can save another 30 to 40% using these income provider options. Okay, guys, that's kind of a wrap up on this. We talked about the stimulus checks and housing. Then we talked about the SBA loans and the pandemic unemployment assistance and your options as either independent contractor or corporation. And then we just wrapped up taxes and financial insight, everything from phases of retirement to IRA withdrawals, health and life insurance. Use this as a resource, guys. 2020taxstimulus.com. I'm posting copies of these recordings as well as a ton of great information. And through the contact link at the website, if you need anything, don't hesitate to reach out. My staff and I were willing to help as much as we're able. Madam President, any closing thoughts?
Yes, I just wanted to say thanks again so much for putting this on for us today. This was really valuable, timely information, and quite a resource for us. So thank you so much, Jesse and Rachel, for being here today. Thank you everyone who logged on to be a part of our call. I appreciate you all participating. And one last time, I'm going to thank our sponsors, our platinum sponsors, Oakwood Escrow. Thank you, Tawny, for being on the call. Rancho Ted, Private Hard Money Lending, and State Farm Insurance, Jake Caesar's office. And also to our gold sponsors, Windermere Homes and Estates and Team Mortgage. Thank you, Stan Stark, for being on the call and representing today. Also, Bird's Eye Home Inspections and A Better Home Inspection. So we've got some great sponsors, and thank you so much for the support, everyone. And if you're interested in being involved in YPN, we would love to have everybody who's interested involved. It's a changing time right now, so we are looking for ways that we can still have a strong community and support each other and share ideas with each other. Also, tomorrow, a group of us are actually volunteering in San Marcos to make N95 masks. Jessica Cruz has been doing this. And, you know, you obviously need to, we're not encouraging people to leave the house, but if you haven't had symptoms and you are looking for a way to give back, they have a great setup at Rock Church in San Marcos. We have a group going from 12 to 3. So if you're interested in that, reach out to me. I'll send you the info. And if you have other ideas of how we can be giving back to the community and supporting each other right now, please keep us in the loop. And if you have any questions about Young Professionals Network of NSDCAR, we are all here for you, and we just want to keep the community strong. So thank you again, Jesse. Great info. And thank you to all who logged on.
Great job, Melody.
Thanks, Melody. Hey, thanks, guys. Thanks for having me back. Everybody take care. Stay safe out there. And, hey, let's get through this and get back to work, huh?
Yes, sounds good. Hopefully soon we'll all be able to see each other in person.
Amen to that. All right, you guys take care, and we'll get this posted on the website as soon as we can.
We'll post this on the YPN Facebook page as well, if that's possible.
Absolutely. I'll send you the information.
Perfect. Thank you, Jesse. Thanks, everyone.
All right, you guys take care. All right, good night.
Thank you.